Welcome to this learning sessions on the self-help groups. Today we will explore the four key provisions that self-help groups offer: saving, credit, marketing, and insurance. And the most importantly, we will examine the challenges that arises in implementing these provisions effectively. Before we discuss challenges, let's first understand what a self-help group is designed to provide. A self-help group is not just a saving club. Mature self-help group offer four interconnected provisions. First, saving. Members make regular contributions into a common fund. This guides the principle is saving first, credit later. Second, credit. The self-help group lend internally from their pooled saving, and after 6 to 12 months of good performance, they become eligible for bank loans under the self-help group bank linkage program. Third, marketing. Self-help group help members collectively sell their product, whether handicraft, food items, or textiles, overcoming these problems of middleman exploitations. Fourth, insurance. Self-help group provides risk protection against death, illness, crop failure, and the asset loss through group-based insurance schemes. These four provisions take together make self-help group a mini financial institution at a grassroots level. Now, we will be coming to the core topic of this session, the challenges in self-help group provision. Challenge 1: limited marketing reach. Self-help group members produce goods but can't access wider market. Challenge 2: low insurance awareness. Market do not Members do not understand or enroll in insurance scheme, leaving them financially vulnerable. Challenge 3: weak record keeping. Poor illiterate and lack of trained bookkeepers lead to errors and mistrust. Challenge 4: dependence on external agencies. Over reliance on NGOs and the government scheme weaken internally self-reliance. We will be now examine each of these challenges in detail, starting with marketing. Let's now look at the first challenge, limited marketing reach. Many self-help group members are skilled producers. They make handicraft, processed food items, web textiles, but producing a good product is only half the battle. The real challenge is selling it. Most self-help group members in rural area can't independently access in urban market or regional trade network. As a result, they are forced to sell through middlemen who offer very low price, captures most of their profit margins. Because of they selling in small volume, their bargaining power is weak. They also lack branding, packaging, quality certifications that modern buyers demand. The impact: despite hard work, income remain low. The economic potential of the self-help group model is not fully realized. The way forward is collective marketing. When self-help groups sell together, they get better price, share logistic cost, and gain access to exhibitions, trade fair, and the government procurement platforms. SHG Federation and NGOs play a key role here in providing networks and the market explore. The second challenge is low insurance awareness. The self-help group are designed to provide insurance coverage, life insurance, health insurance, livestock insurance, crop insurance. This product exists government scheme often then when there is a serious gap in awareness or adoption. Many SSG members, especially in rural area with low literacy level, simply do not know these schemes exist. Even when they do know, the concepts of paying a premium today for an uncertain event can seem continuously to someone struggling with daily income. Premium, even small one, may feel uncomfortable, unaffordable, and when a claim does occur, the paperwork and the process can be overwhelming. What happens when insurance is absent? When family member fall ill, the household borrows to survive. When When a loan borrower follows the self-help group fund is demanded. Low insurance uptake creates a cycle of vulnerable. Exactly what self-help groups are meant to break. The solution lies in the financial literacy training, conducting during the group meeting and enrolling self-help group as a group into insurance scheme so the premium cost is shared collectively, making it manageable. Now, coming to the challenge 3 is weak record keeping, one of the most critical barriers to self-help group sustainability. A self-help group maintains three key records: a minute book, a saving register, and a loan ledger. These documents are not just internal management tools. They are the evidence that bank examine before sanctioning a loan under the self-help group bank linked program. These challenges begin with literacy. Many self-help group members, especially women in rural area, have limited reading and arithmetic skills. Maintaining accuracy, financial record required both. We know trained bookkeeper is available. Error cheap creep in. At time record at manipulations, either due to negligence or unforgettable deliberately or misrepresentations. The consequences is bank that find inconsistent or poorly maintained record will not extend credit. This default the very purpose of the self-help group model. Now, NGOs, facilitates, government livelihood missions, and the self-help group federation must invest in training, designing members as a bookkeeper with regular auditing to ensure transparency and the trust. Now, coming to the fourth and the final challenge in the department dependency on the external agencies. Self-help groups are designed to be a self-help. The very name emphasizes self-reliance, but in practice, many self-help groups remain permanently dependent on external support for their funding. NGOs for and the facilitates self-help group. Government provides subsidies and dissolving funds. Bank extend credit. These are the four valuable input, but only if they are translations, not permanent. When a self-help group depends on an NGO for even meeting, even decisions, or every financial transaction, it's not fully become self-managed. When members feel the funds come from the government scheme rather than their own savings, ownership weakens and the repayment disciplines declines. The moment the facilitating agencies withdraw, such as the self-help group often collapse. The solution is phased approach. External agencies should provide intensive support in early years, then gradually reduce the role as a self-help group build internally capable. Now coming to two self-help group in similar condition receive same support. One thrive, the other struggles, not because it's lack fund, but because it fails to address the non-credit provisions. Poor record keeping make the bank recurrence, low insurance awareness, leave members vulnerable to financial shock. Weak meeting linkage means member can't grow their income. This case study teaches us that the credit alone is not enough. All four provisions saving, credit, marketing and insurance must work together, supported by strong leadership and capable facilitation. Now, to summarize today's session, limited marketing reach is overcoming through collective actions and institutional support for marketing linkage. Low insurance awareness is addressed through financial literacy and group-based insurance enrollment. Weak record keeping is resolved through sustainable capabilities, buildings, and dedicated bookkeeping training. Dependency on external agencies is tackled by building internal governance and phasing out facilitators support guide. This overreaching message from this to you. Thank you for watching this video. on challenge in self-help group provision.